Japan's in a bit of stuck between a rock and a hard place. If we strip back everything, we just look at what this election result really means. What it means is the LDP will not be able to just implement its grand policies as easily. That's the long and the short of it. It's still in power, but it doesn't have the absolute majority, so it can't implement policies as easily as it may have once upon a time. So if we take that back, what does it really mean? Well, it does mean Ishida's got his core policies that he's actually spoken to is, we know that he doesn't want interest rates low forever. We know that. We know that he's a nationalist. And those are really, and we know that he wants to invest more in defense. Outside of that, Pella doesn't believe there's been an abundance of economic information, and he's spent in plans to share. The long and the short of it, though, is one has to believe that there'll be less pressure on the BOJ to increase interest rates, at least politically. Having said that, we understand that with a lower yen, they might be tempted to, but it's very difficult to see where the political pressure would come from. And certainly domestic demand in Japan is not strong enough to actually warrant high interest rates. So they are stuck between a rock and a hard place in that they need to increase interest rates to reduce imported inflation, but at the same time, the economy can't sustain it. Pella believes the BOJ is likely to stay pat. We don't think they'll cut rates, but we don't think they'll increase rates materially going forward, simply because that economy can't really handle it right now. And as I mentioned before, there'll be less political pressure to increase interest rates. The main implication for that, as far as Pella's concerned, is it supports the carry trade, which is good for tech in the US.
Oh, yeah, and that's showing up in the way some of those tech stocks are rallying away. But obviously, we're also looking at the U.S. election outcome, less than 10 days from now. I do want to very quickly, Stephen, get a sense from you on the BOJ's decision this Thursday. Do you think that they would even take the chance at all to signal that there is another rate hike coming because of what the yen has done?
Well, if I was running the BOJ, there's no way I would do that. We've now got political uncertainty there, and the last thing that economy needs is to increase interest rates. So if I was UAIDA, I would not be signaling higher interest rates. I would wait and see, and I would certainly hang back. We don't believe that economy can handle high interest rates right now. It would go into a recession.